Welcome to the Circle Investor Podcast. If this is your first time listening to the show, we talk about all things Central Indiana real estate, business, and beyond. If it's not your first time listening to the show, then welcome back. On today's episode, we talk about
my job is to go into these different businesses and poke holes.
A calendar is a budget for time. If there's nothing on my calendar, I'm so stress-free. All right. Well, Nick Giulioni, welcome to the podcast.
Yeah, thanks for having me.
Yeah, appreciate you coming on. We have been very excited to sit down with you, record this episode. Just by way of intros, Nick owns and operates a wedding venue and vacation stays down in Brown County, Indiana. Also the owner of Off Leash Construction, a high service construction company based out of Carmel, Indiana. You own a large portfolio of rental properties. Like me, you're a California transplant that moved out to the Midwest to raise a family in Indianapolis. Unlike me, you left a job, a Silicon Valley type job. I'll let if you want to get into all that, I'll let you. But quite a backstory, and you've accomplished quite a bit. So thank you for coming on and talking to us.
Man, I gotta have you just walk into every room before me and give me that intro, man. That felt great.
Yeah, I'll bring my like one of those medieval horns too to announce, like, just feel like hear ye.
Yeah, no, I love it. Well, thank you for having me. I always love getting the opportunity to chat with you guys and be one of the first guests you guys have. This is pretty darn exciting.
Yeah. We couldn't think of a better first guest. I think you have just such a well-rounded experience when it comes to what being involved in the real estate market in Central Indiana is like, because you see it both from the real estate investor perspective and also from the perspective of somebody who's not originally from Indiana. And you see it from the perspective of somebody who is now a business owner in Indiana and a service provider to investors. Yeah. So you kind of, it's like you're playing chess against yourself.
Yeah, a little bit. And, I think we'll probably get into it a little bit, but I think that's actually a fairly common story for people who are here in Indiana that build up their portfolios. They quickly realize that, you can build wealth that way, but eventually you try to find some alternative income source. And that's kind of my story and my accidental life here in Indiana is just finding new businesses as I've gone through the entire journey.
Yeah.
But yeah, I mean, where do you guys want to start? Like, I think that there are a lot of directions we can go here with this.
Well, yeah, absolutely. I know I gave us here's this huge overview. I do have, I've kind of, it's sort of a two-part question for you because as long as we've known each other, you're doing so much I can barely keep up with. Me too. With what you're doing. So maybe this will be a good for you to take your own inventory of. I'm curious, like kind of off the top of your head, do you know kind of how many rental properties you're at currently, or even like roughly how many properties you've bought and sold?
So I've personally owned over 200 properties across Indianapolis since I started investing back in 2017. Now I think I own about 55 or 60. In that ballpark, doors. Generally speaking, my objective is probably different than a lot of the people that are going to be listening here. When I started off, like back in 2017, it was my objective, my only goal. I would write down my goals every single morning and send them to a couple of my friends. But one of the big ones was I wanted to own 1,000 doors. Now that sounds like my personal hell. And as I grew, if all you're measuring is door count, like you're going to get, and I'm sure you guys have seen this from the property management side a lot, you're going to get a lot of pretty crappy doors. And so over time, what I quickly realized is that my objective should be to have ease of life, not, to have the biggest portfolio in the world. And so fundamentally, I'm actually trying to get down, if I could get down to like 10 great doors, 10 A+ class doors, the cash flow on those don't look as good on paper as the $1,200, the $1,000 rentals that a lot of people are looking at, but the ease for my life, the not having evictions as part of my world is something that I really, really value. The other thing that and we can get into some hot takes here is that all the all those $900, $1,200 rentals, they look great on paper, but that doesn't actually take into account a lot of things. Those places generally speaking, have been neglected for a lot. And so there's going to be a lot of CapEx here over the next several years that you're going to have to deal with. The other thing to consider is even if you're in the exact same condition between my $350,000 house and your $100,000 house, that roof is going to cost basically the exact same if it's for the same square footage. That furnace is basically going to cost the same $9,000 across different property classes, and the water heater, all those things. So I've kind of gotten into the stage of my investing that simple A-class properties is all I'm looking at. But I understand like the journey that I've had to go through, and if I was talking to myself back in 2017, like I wouldn't have been able to hear that message.
I was just going to phrase it that way. Like, would you have been able to convince yourself in 2017 that, investing purely for cash flow is maybe not,
I couldn't have heard that message at that time. And it was easier to make cash flow back then. We're in a very different market where cash flow is super, super tough today, with interest rates being higher, the cost of construction being higher. Like, I couldn't have heard that message, I don't think, at the time. And I was so mono-focused on like, how many doors am I able to acquire? How quickly can I do it? I remember there was one transaction I did where I picked up 26 doors in one transaction. Like, I was so much closer to my goal. Little did I know that was going to be such a pain in my ass over the next. Sorry, I'm not sure if that one's allowed here on this podcast.
It is.
But how much of a pain in the ass? Now, I will say on the other side of that, you have to look at all of the 5 wealth drivers of real estate. Obviously you've got the cash flow, you've got the appreciation, the loan pay down, the inflation hedging, and the oh my gosh, I'm missing one. It'll come back to me. But regardless, the tax benefits.
Tax event. Okay.
Yeah, there we go. I wasn't going to be able to move on. So you've got all 5 of those there. I actually have just started to reduce my door count. And actually just sold one this morning that was part of that 26 property acquisition that I did. And I look at the cash flow in this place. I've made $1,000 of cash, like real cash flow, if you really account for everything and you're super smart about it. I've made about $1,000, which that's fine. Like, did all right. But when I sold it today, I literally made $26,000 of just appreciation, net of agent fee. No, pardon me, 28,000. Net of agent fees, net of everything over that period. Like, that's where the real wealth was for me. And I think that, again, there were quite a few headaches along the way, and I would have made that much, if not more, in a similar investment that was a higher end property.
Yeah. That is and having been through that experience for so many years with a property that you probably originally purchased, especially if it was part of a 26 unit portfolio, you purchased it for its cash flow, its long-term cash flow.
Oh yeah.
And then in hindsight to look at it like, well, I kind of broke even cash flow wise, but I made my money on appreciation.
Yeah.
I think that's a perspective that so many new investors need to kind of hear, because it's, like you said, we are in a different market today than 2017 in central Indiana. But I do think that is kind of somewhat a universal truth of real estate, is that if you can get positive cash flow from month to month, that feels incredible. I so many people that are first getting, I see it all the time with clients I work with, where they're just locked in, focused on, I'm going to get positive cash flow. I'm so focused on you hear that financial freedom phrase thrown around, passive income. Like, that's what everybody's about. And okay, sure, those things are great. And there's a lot of that happening in real estate. You can build a wheel of cash flow that can free you from sort of the burden of trying to keep up with your bills. And so it can be powerful, but it's like you really want to be able to, it's so hard to give somebody that perspective if they haven't experienced it, where it's like, oh no, the real golden goose here is, I've started to, having watched so many investors go through this progression, I have started to see it as this, as cash flow is just an excuse to hold on to real estate. or it just allows you
Yeah.
to hold on to real estate long enough for it to grow in value, and then that's your reason.
I 100% agree with that assessment. I think that the cash flow keeps the lights on and keeps the investment able to grow. You absolutely nailed it. All of my greatest accomplishments here within Indianapolis have been because of the growth in the market, the appreciation that's happened, the loan pay down that's occurred. I mean, heck, man, and we can talk about this too. That's how I bought a wedding venue. Is literally I had a hedge fund come and offer me more money than I thought 17 houses were worth out in Avon, and I was proven right in the grand scheme of things. So I said, yeah, great, take them. Like, these were like the crappiest little burrs you ever did see. Like, I spent like $8,000 a piece in these things. Bought them, I think, for 123. They had just been appraised for 165. Hedge fund came, offered me 183 back in 2022. So I was like, great, like, feel free. And I converted that equity that I just built into a business. And I think that's where the real opportunity for cash flow is converting equity into cash flow. I think that's totally within the realm of the possible. But yeah, I think it's really, really difficult on one house by one house. With the exception, I actually think you can potentially do it in the in like the short-term rental market. But in that situation, that's more of running a business than it is of running a traditional long-term passive buy and hold.
I was just gonna say that's something I want to like get into more, that distinction between, you said, running a business versus I own a rental property.
Yeah.
Like, and where does that transition happen? Because I think I would agree with you. I think that right on that borderline is a short-term rental. That's when it starts to transition from, this is a totally passive rental property. If I cash flow on it, amazing, to I'm running a full-fledged business, but that's also where the upside comes in for actually producing that monthly revenue.
Yeah, no, it's a tough distinction, and this is probably going to be an unpopular opinion sitting here with property managers, but even when you have a property manager, I don't consider owning a rental a passive business or a passive income in any way, shape, or form. And again, we can talk about my history with property managers, not not you guys, not Intrigue. You guys are awesome at what you do. But yeah, I think once you transition from essentially a situation where when you own a long-term rental property, you have the power as the property manager, as the owner of that property. Somebody, you agree to a lease, they don't perform, you get to take them to court and get them out of the home. Very different when you transition into a short-term rental where you're in a hospitality, you're in a service-based industry in that scenario. Same thing on a wedding venue, same thing with a construction company. Like, you are serving a customer, and your outcome is based on how they perceive your service. And I think that's where you get significantly greater upside, like you were bringing up. But it is a ton more work.
That's also where you eliminate a lot of the people that might be qualified to own a long-term rental are not qualified to run a short-term rental.
No, definitely not. It's funny. I helped a couple people with their short-term rentals from the construction side. We obviously have a maintenance department, and I can quickly tell the ones who I'm like, oh, you are not going to be running a short-term rental here in another year. You're going to have a 2-star rating and be wildly unhappy with the performance that you're getting. It's not, the number of people, and I'm sure you guys see this all the time on your side, the number of people that, assume, hey, I just toss a couple of pieces of furniture in there and I put up a listing on Airbnb and I'm going to do so much better than I would on the long-term side. That's just not the way it works.
Yeah.
On the STR side, I'm curious to hear if it's platform dependent. Like, is Airbnb more favorable to the temporary tenant or to the owner, or is Verbo balanced differently?
They're definitely different. And I'm by no means an expert at these platforms. Like, I run a couple of short-term rentals myself, but there are people who know 1,000 times more than I will ever know. My quick and dirty experience is that when you are on the long-term rental side, you get to kind of be, what I affectionately call an ass kicker. Like somebody doesn't perform, you kick them in the butt. When you're on the short-term rental side, transition more to that ass kisser type of situation where the number of times a guest is like last minute, like, it's noon, they're supposed to check in at 3, like, hey, can we check in early now? I'm at the front door. It's like, no, like we've got cleaners still in the house. Is like almost a weekly occurrence.
I just did that on Friday.
Yeah, I bet. And in those scenarios, we have to be like, no, we can't let you in, but like, here's $50, go have a drink on us. It very much switches from like, you're not performing to you're making an ask I can't make happen. Like now I'm going to go above and beyond. Yeah. And so I cannot remember your question, but I definitely
just which platforms favor which side, the owner of the property versus.
So all of them tend to favor the guest over the owner of the property, without a doubt. With that in mind, I would actually say Airbnb has been better to me recently than VRBO has. When we've had a couple issues recently with parties in houses, and there's certain trends we're starting to pick up on that I think are going to allow us to block that in the future. But the like Airbnb has generally had our backs in those situations. We had one where somebody did about $10,000 worth of damage to our house on VRBO, and VRBO's basically just told us, hey, you should call the cops. And we're like, how about you charge the customer? And they're like, you know what, this sounds like a you problem. Make an insurance claim. And so we actually pulled all of our stuff off of VRBO when that happened. When they allowed a bad guest on their platform, they essentially validated that guest and then wouldn't back up. That scenario.
Yeah. It's very interesting because all of these platforms, you already mentioned the big two, like they have an interesting existential problem. Like, and a lot of them do favor guests because, the driver of value in any industry, in any business, is eyeballs.
Demand,
yeah. So they know if they lose the hearts of the guests, then they lose the whole market. So that's why that's their focus. But they also know that if they lose the hearts of the owners, they lose their supply. And so it's like it's a weird tension.
It's definitely a weird tension. And I think that there are a couple of things at play there. Fundamentally, if you're the one paying the money though, like you have the power. And so so they always have, like, as long as they have the money, they're going to find houses. Like people are always going to be looking for a way to make income. So like I actually think that that's less of a dynamic for them than the other side.
Meaning they're always going to stay on the guests side because they can't lose that demand because there'll always be owners to backfill.
Yes, 100%. As long as they've got dollars to hand out, there will be people that are willing to give up their homes. And I could be wrong, but that's my perspective there. On the guest side, we've actually seen a huge shift over the last several years. During COVID, nobody wanted to be next to each other. Everybody wanted their space, and that's when Airbnb and VRBO really, really took off. We're seeing people go back to hotels now. Cleaning fees have gotten out of hand with a lot of these owners. Like they're not actually operating effective businesses. And let's be honest about it. Hotels are a good experience. If what you're looking for is a clean room, economies of scale, getting some amenities, like it's a great way of having, incredible amenities for that are split across multiple guests at an affordable price where, I might have one pool table in one Airbnb. They can have, one pool table for 10 rooms or, again, there are huge advantages there on the hotel side. And so a lot of guests are starting to go back that direction. So all these, small, condos and stuff like that are Airbnbs, they're going to get screwed over. You have to find something unique. Be the Taylor Swift house that like no Airbnb or no hotel is going to have the Taylor Swift room. Go have the 4-bedroom where you can have the entire family come stay there. Like that's your opportunity, not just being an affordable option.
Yeah. This is a good segue into, I was just going to say that I don't love hearing you say this. I don't disagree with you, but the shift back to hotels, because that's something I always feel personally. Like if it's just me or if it's my wife and I and our kid and we're traveling somewhere, like I'm never booking a short-term rental unless it's just a crazy market where there's really just no hotel options. Like hotels are great. Yeah, you check in, you're up on a secure floor. It's just very easy. It's very seamless. They have that economy of scale to allow for that. But I do completely agree with you that, I mean, just like in any business, you have to find out like what is our competitive advantage and our value proposition.
Yeah.
And if you're going to do short-term rental, I have to do things that hotels cannot do. I have to be able to offer an exceptional experience or offer that utility that a hotel can't.
Yeah.
So the reason I say it's like, oh no, is there a shift happening back to hotels? I actually, we just bought a short-term rental in downtown Indianapolis.
But I'm betting it's not a 1-bedroom, 1-bath.
It is not.
So it's going to be kind of an opportunity for people to host, a bigger party. Like I don't mean like to throw a party, but like have a bigger group there that are there with you guys.
Yeah. Yeah. It is not a 1-bedroom, 1-bath. It is actually a single family home with a carriage house behind it. And our strategy with it is the front house is a 3-bedroom, 1-bath. The back carriage house is a 2-bedroom, 1-bath, and actually has a rooftop deck that like overlooks the city of Indianapolis. It's in Fletcher Place. So we fell in love ourselves with the location because it's like walkable to Pacers games and Colts games. And the fact that the property as a whole is 5 bedrooms, 2 baths between these 2 units.
Yeah.
Our strategy is to actually create 3 listings.
Yeah, super listing. You've got one, front, back, and then everything.
Yeah. So big families could book the whole thing, or we can also get those those smaller groups that still want more than, a studio in a hotel.
Yeah.
Like they want to have that, shared spaces. So
dude, it's going to crush. I've got one down in Bates Hendricks. Now it's a 2.5, I want to say. And that thing just crushes. Colts games, really anything downtown. It pulls.
Yeah, that's awesome.
Yeah.
That's awesome to hear. Because we are spending so much money. That's what I found like the biggest, because I've owned long-term rentals. And so this whole conversation is just like enriching to me because I'm just sitting here going through this transition of I mean, obviously I've been running a business with property management and real estate, but from just a property investor standpoint, I've always done long-term. And now I'm going into this transition of really trying to understand
dabbling
Airbnb and short-term rental and doing this. And it's just trying to think through all of those little things. And luckily, I mean, my wife, Lindsay, this is her baby. So she is like taking care of all the little things with it. I'm like free labor, mostly.
You're a strong back and a pretty face, and she's the real hard worker.
Yeah, exactly. She's the mastermind on it. But just like every night, it's like I come home and she's talking about like a new thing. She's like, oh, they're saying that you actually want to get these kind of towels now because it just like all the nuance that goes into.
Oh yeah, you're trying to build an experience.
Yeah.
I think you're doing it at the right time too, because Indianapolis seems to be heating up between the Colts and the Fever and the Pacers and the races, and so I think you're getting in at the right time too.
Yeah, that's right. You got to watch out for our delivery drivers.
It's a little too real right now as a USC
fresh
football fan. Don't know when this one's going to launch, but it's definitely been an interesting time and for USC football here in Indianapolis.
Oh yeah. That was what a wild story that was, and just the way it like came out and then changed. Is just like bizarre. But
I feel like it might turn a couple more times before this one's done.
I'm sure it will. It has to.
Yeah, but it's one of the what I was seeing was like, obviously we're talking about Mark Sanchez and just the events that took place in Indianapolis leading up to the game, which as we're recording this was yesterday. I was seeing people compare it to like the stuff Shannon Sharp went through like back in the day in like article, and it's just like it's one of those that is going to be played out in the court of popular opinion, or unpopular opinion. Yeah. But as soon as like the news broke with it, I was like, oh man, yeah. Like I promote Indianapolis and puff it up all the time. So I'm like, this could go. This could really go either way for us.
Well, and it's funny that you bring that up. I'm in a bunch of USC football like group chats with all my college buddies. You know, I go to a game or two with them every single year. We just we're back in LA for a game recently, and they were all like coming at me a little bit. And
they're like, "What did your city do to our guy?"
Yeah, and then you know you get to kind of reply back with, "This one might be on LA."
Yeah, but yeah. So that's we kind of have a segment that we like to go into called Challenges of the Week, and that is very much we've already kind of gotten into my challenge, which is outfitting this short-term rental while also trying to do my regular job. So it does. I'm definitely in that season right now of like I feel like I'm burning the candle at both ends. You know, launching a podcast, like doing property management, managing real estate transactions, and also launching an Airbnb on top of it. So I feel like I've got a lot of spinning plates. But what about you, Stuart? What do you got going on?
Well, I'd be curious to hear Nick's take on this, because my challenge of the week is about playing catch up. We spoke a little off camera, but I went out of town over the weekend for a bachelor party, and I just feel like whenever I take my foot off the gas, I feel like I fall out of tune with what's happening, that you know I'm just playing catch up for a few days. But I'd be curious, Nick, to hear your thoughts on with so many irons in the fire that you have. How do you decide, you know, which venture to put most of your time into?
Man, that is a hard one. So I'm incredibly blessed in that I've built up a very solid team across all the different things that I do. At the two wedding venues, I've got a full-time staff of 4 or 5 people there that kind of run the show. And then, you know, at Off Leash Construction, I've got an incredible group of people. You know, I've got Jamie, who you guys deal with a lot, who runs maintenance, Lauren running operations, Paul running construction. So basically my job is to go into these different businesses and poke holes. That's like I go in there and recently did this at the Wilds, one of the two wedding venues, where I saw some issues with our business processes, and I needed to go in there and understand it, poke holes, ask questions, and create chaos, and then hand it back to them to go fix. And so that's kind of what I do on a day-to-day basis, is I just go back and forth. And thankfully, I've got, like I said, an incredible team. I also have a virtual assistant who kind of keeps me on track and wrangles me a little bit and tells me what I need to do every morning and like where the fires are. Because, you know, I've got incoming like requests coming at me from 14 different directions all the time, and she kind of acts as my filter, and then tells me, hey, these are the important things you need to focus on, otherwise balls are going to drop. So I don't know if that necessarily answers your question, aside from like you got to build the systems and build the teams so that you know, when you step away, things continue to happen. Like that actually is always the most impressive thing for me. Is I'm very bad about taking vacations, but when I do, like, the business continue to run, which is the sign that you've done something right.
Live and die by the calendar, right?
Oh my God.
Yeah.
Calendar and to-do list.
Yeah.
I'll be very honest with you. People who don't use like to-do lists and calendars drive me insane. Like I will very quickly move them out of my world because I don't have the patience for it.
Stuart, I'm smiling at Stuart because like that probably reminds you of what I'm like.
Yeah.
and what I've had to become. I wasn't necessarily in a position where I needed to live like that before I met Ryan, but more so than ever, I've been living by my calendar, both personally and professionally, and it's made my world so much easier.
Yeah, a calendar is like, so I first heard this like in college, where people would talk about like creating a budget and stuff. And I remember I heard somebody like describe like, oh yeah, you create a budget and it actually gives you more freedom financially. And I just think a calendar is a budget for time. So if I want freedom with my time, then I need to know exactly where I need to be and when, because then if there's nothing on my calendar, I'm so stress free. you
Yeah.
know, because I know that I'm not needed anymore. Or I like, what am I forgetting?
Yeah.
You know, like, yeah, when you know, we have people on our team and like we'll have like it's always like as we onboard like a new team member, I feel like there's always a grind there where I'm just like, add it to your calendar, add it if it's not on, like, or it's like or they'll, you know, even I'm so bad, like if team members want to call and discuss something, I send them my calendar link to book, and I'm like, add it to my calendar if you want to, you know, have a meeting.
And here's what I'll tell you, your next step is going to be like my VA EA. Like I don't even update my own calendar when I need something changed. I just shoot her a text, and she'll do it. Or like somebody on my team wants to have, you know, coffee with me or wants to have a call. Hey, they know now. They don't even reach out to me anymore. They just reach out to Tamar in order to get on my calendar. Like that will be.
That's
like,
the metamorphosis.
It's pretty fantastic once you like don't even touch your calendar, you just look at it.
Well, that was actually something I wanted to get deeper into. You mentioned like you have a VA that that like preps you every morning. Like here's what Nick needs to do.
Mm-hmm.
I, as somebody, like I work with VAs myself. I've trained them to work different positions within our organization, but I have never done the sort of the personal assistant or the executive assistant type VA. And I think part of that for me, maybe it's a control thing. Maybe it's like maybe it's like, I don't want to give somebody that much access. So I'm curious kind of how did you develop that? And like what, I don't know. I mean, of course, don't overshare, but like, you know, whatever you want to say on that. I'm very curious.
Yeah. So, I felt like for a long time, I was going too many different directions, kind of to Stuart's earlier question. And everybody and their mother was like pulling at my attention, pulling at my time. Mm-hmm. And I wouldn't say I had a breakdown or anything like that, but I was always stressed to the max. I knew that if I went in do not disturb mode, I would come back to a million messages. And like hell, I just went in do not disturb mode before this, and I'm pretty calm about it because I know there's there are three people who can get through to me at any given point in time now. It's my wife, my daughter's babysitter, and my executive assistant or VA. Yes, I've given more access. She has access to my email. She has access to my calendar. She goes through my email and clears a bunch of the stuff that I don't need to be thinking about or worrying about on a day-to-day basis. But I give that access so that I don't have to give access, like smaller pieces of access to everybody else.
Yeah.
And you know, what it means is, you know, I've got Google Chat on my phone. I have no notifications on Google Chat. I almost never go in Google Chat, despite the fact that I've got 20 plus employees at Off Leash Construction that are constantly chattering about a variety of different things, because I know as soon as something comes up that I need to be aware of, Tamara's going to shoot me an iMessage. And like, so my inbox then just becomes like, she can get through to me if something important's going on within that world. And nobody else on my team except for Lauren and Paul, who are my co-founders of Off Leash, even have my personal phone number. That actually has been a huge improvement. Like I don't give out my personal phone number anymore. Tamar actually has access to, we use Open Phone, which I think just rebranded to Quo. But like we have a shared number on there, so that's the number I give out to people now, so that I don't have to give my personal phone number. So again, she can be my filter. It's like, hey, you actually need to pay attention to this one. So you find one person that you like, trust, and can train up, and they're never going to do it as well as you will. I guarantee that you're the business owner of Intrigue. Like you brought in Stuart. I'm sure he does an absolutely incredible job by every metric that you guys are looking for. But I guarantee that there are things that you're like, if I was in that seat, I would do it better here as the business owner, because like you have just a different perspective on it. And like you're trying to train somebody up, and but like that, having somebody there doing 90, 95, 98% as good as you could do it means that you have that time to go and do 1,000 other things to grow Intrigue. And that's kind of the way I view it is, yeah, she'll definitely piss a couple people off, but like the people who really matter that I get eye to eye with will definitely have an understanding of kind of what's going on in my world, in my life.
Yeah. That makes sense. That's kind of as you were kind of describing that, I think that my hang up with it is definitely more on the control side than the access side, because I have given out that like different levels of access to different people on the team, but it does come down to that I just wanting certain things like handled the way I want them to be handled. But then of course then you get spread really thin.
Yeah.
So I can completely relate to that, like that feeling of like I don't want to go 24 hours not looking at my inbox.
Yeah.
Because it just means that stuff's going to pile up in there. Mm-hmm. So I think it's probably something I need to look into at some point,
or not. Like, hey, it works for me. It might not be the right fit for everybody. I just for me, I don't want to let my team down. And I know that I will, if I am responsible for managing my own filter, I'm going to let my team down.
Yeah.
And so there, that's kind of my perspective on it, because I could feel myself burning out.
Yeah. I think trust is a heavy factor there, because, you obviously have a lot of trust with your go-to person, and Ryan and I have a dynamic where I'm always open to some kind of, whether it's positive reinforcement or constructive criticism. If he wanted to do something differently, I'm encouraging him to tell me regularly, like, hey, just tell me, and maybe I can tweak it a little in the future, or just tell me I did it wrong, but maybe privately. Right?
Yeah. Maybe not in front of all of our podcast listeners here.
Sure. Yeah. No.
Anytime like I'm giving Stuart feedback, I think I've done this multiple times where it'll usually be something like that, where it's like, I would have done that a little different if it were me. Yeah. And not even that he necessarily did it wrong. It's just like, well, I would have done it differently, and here's the reasons, why. And sometimes when I'm giving that feedback, I think I've done this a couple times where I'll say like, I just need to say something, and I'm going to do it really clunky. I just like, apologies in advance for, just like trying to leave like, the emotion of feedback out of it. It's just like, this is, I have to do, just for my own psyche, I have to say, this feedback, and I apologize if I don't do it in a perfectly,
coherent
way.
Coherent, kind, like, hear this in the way it's intended, not in the way it actually, like the words that come out of my mouth.
Hear the words in my head, not the words that come out of my mouth, please.
Well, I'll always give you a couple extra opportunities, kind of just like recording a podcast. When it's not live, we have the opportunity to like say like, well, hold on, let me say that again, but also with this preface. But yeah, I think that trust is very important when you're working with someone who has so much access and control over your day to day.
When it takes time, like let's be honest about it here. Like, you might not want to give up access to your inbox, but right now you've given up access, or not access, but like you've given up control of the entire maintenance and billing. And I don't even know all of Stuart's responsibilities, but you've given up a huge portion of that business. And like, you guys are 300, 400 doors of property management. That's a huge business that you have basically offloaded to somebody else, and you're managing, but that there's a huge amount of trust there.
Yeah. For real. I think that's also why I'm like, I think I look at like the inbox as like the final, like the last stand for me, where it's like, if I give like, I've already got team members that are doing things with the business that like, I'm not in the room for, so I'm not privy to. And thanks for bringing that up. I try not to think about that, but but it's like, it's like, okay, that's already happening. So anything that hits my inbox, like, it's like, I want to be able to steer this, but that I feel like that's a tension you're always wrestling with as an owner, is that like, sort of in your own mind, like doing my part to like steer the ship as best I can. But knowing that I'm one person, and like, as this company grows, I can't do all the things.
No.
So you have to delegate at a certain point. But I really loved I wanted to circle back to, I loved how you put it when it comes to what the job of an owner, or the job of like the president, CEO of a company becomes, is like going around poking holes. Like, because I relate to that so much.
Yeah.
Like, it's somebody else's job somebody else owns this process. I'm not going to be so much of a control freak that I'm going to come and completely revamp it for them, but I'm going to go in there and basically break it and say like that. Here's where the breakdown is, and we got to do something else here.
Yeah. Well, I think it's a delicate balance, and I'm not good at this. I'm not necessarily good at the proactive, like, you're kicking butt, guys. Let's go. Like, I have to be reminded. I actually have a reminder for myself every single day to like compliment one of my employees because that's just not my default. I go around poking holes, and so like I was doing it this weekend. I sent an email to a bunch of team members. I'm like, hey, our website only shows availability for these days. Is that right? That doesn't feel right to me. And people then were responding over the weekend. I'm like, oh shoot, like that was a miss on my part. Like I should have deliveried that until the week. And so it's definitely poking holes. It's definitely finding the breakdowns in the process, but simultaneously building your team up and making them feel tall enough that they can solve any of the problems that that they're going to face or that you put in front of them.
Yeah, I think we should get into these articles actually because we have some interesting ones.
Okay, I think so too.
So I don't have a way to bring it up on the screen, but I want to talk about an article that Stuart found. It's from the Tri-City Record, which I don't know what that publication is, but
very well known.
Yeah. They seem legit.
It was a big enough story where I could have picked a number of sources, but it was all the same story basically across all platforms.
We're getting back to Mark Sanchez, guys.
No.
Yeah, it's about Mark Sanchez. It's about his rental portfolio.
He was actually out visiting. He got stabbed by one of his own tenants.
By one of his tenants, yeah. So this is about Greystar. So I don't know if you've heard of Greystar, but they are a very large property management firm. And so it says Greystar and other landlords who don't get, to top billing. So lucky for Greystar, they get to be mentioned in this. Agree to a $141 million deal to settle a rent setting lawsuit, which basically sounds like price fixing.
Yeah,
is sort of what they got accused of. But the article gets into, real estate giant Greystar and 25 other property management companies have agreed to collectively pay more than $141 million to settle a class action lawsuit accusing landlords of driving up housing costs by using rent setting algorithms offered by the software company RealPage. So this was something that I did first. It was actually maybe 2-3 years ago when this first broke out.
Yeah. And
I remember hearing something about it, but I guess it was, as those class action things go, they move very slowly.
Yeah, no kidding.
So I guess it was just settled. But I guess Greystar alone is going to pay $50 million.
And so they essentially just brought in an external software to help them identify like what the optimal price was.
Mm-hmm.
All right. So like kind of like if I went on Rentometer right now, could I be accused of price fixing based on looking at comps? Like
looking at comps. So I think that's an interesting question. And I think that's one of the reasons why this is such an interesting case.
Yeah.
Obviously these are large property management firms that have a lot more scale than, any of us in this room. But I thought that was interesting because the article gets into, it says Greystar, where is it? It said that they currently manage
close to 1 million doors.
It's close to 1 million doors. It was like 946,000 or something like that.
They've got to be on the apartment side.
Yeah.
Oh yeah. So all of these companies, these are, and I know from being in the property management kind of world, like RealPage as a software, like people that do what we do at Intrigue don't really use RealPage. We use a software called AppFolio. Comparable softwares would be like Buildium or Yardi. They're better for like third-party management of like smaller portfolios, mom and pop across several different addresses. RealPage is a software that's really designed for like a handful of buildings.
Yeah.
So it's like you have this campus that has 300 units on it.
Yeah.
And it's going to have its own, basically that the apartment complex is going to have its own website. And so it's a more expensive software that's my impression. It's more expensive software that does a little bit more than Appfolio does. So all of these companies that manage that type of asset utilize RealPage, but the article does say that the companies have also agreed to no longer share non-public information with RealPage for its rent algorithm. A key stipulation, since plaintiffs say RealPage used that information to enable landlords to align their prices and push up rents. So I think that's the distinction of what you're saying. So like, you know, a lot of private landlords will use like Rentometer. We use Rentcast at Intrigue. Like there's these rent comps, rent comparables platforms that you can use. But I think the key difference is they are using public data. They're using public data to say, you know, here's the rents that everybody could see, but we're just going to consolidate it for you based on this subject property that you're entering. And we're going to give you a summary of this is what we think you can rent for. Whereas the key thing that was happening with RealPage is you had these they were basically getting sort of a competitive advantage by.
So like what kind of information could they potentially give? I'm thinking things like upcoming vacancy rates, like when units are going to vacate. Like I can imagine that actually being really, really important for being able to, drive up rents over time.
So this is an interesting part of it. It says RealPage has vehemently denied any wrongdoing and argues that the plaintiffs misunderstood how their product works. RealPage, which is based in Texas, has said its software is used on fewer than 10% of rental units. Like, oh, look how small, just 10% of the whole rental market in the US, and that its price recommendations are used less than half the time. So it's like people don't even use this.
5% of the all the rentals in the country. All right. I mean, fundamentally, I don't think any of us are looking to gouge people. I don't feel like I have a good enough understanding of the actual implications there to cast too much judgment, because, you know, fundamentally, like I think, you know, you could make similar arguments about, you know, the MLS providing information that drives up the value of houses. Like, again, I'm sure I'm missing something. I'm sure there's a lot to this that I'm not understanding, because you don't settle for $100 million plus if there's not some wrongdoing. But,
it's saying that RealPage argues that the real driver of high rents is a lack of housing supply. I mean, basically, like,
that's true.
It's not our fault. It's the market. I'm sorry. Yeah. Like I think that's the
we're looking for somebody to blame. Let's blame the company that prices it, not the fact that we don't have enough housing in the country.
Yes, I think that you could. That's the other side of this is that people are frustrated about the price of rents and the just the price of housing in general, and they're looking for someone to blame. So let's blame the largest property management firms and the largest property and the software that they use for the problem. That could very much be the case. Or like I could also, you know, that's the problem. You know, we're just looking at an article. We don't have all of the details of this case in front of us. But I could also see these companies, it's 25 companies that represent, you know, like a large 10% is a large share of the US market for rental properties. And you could use that economy of scale as leverage to say like, hey, we're all going to enter this data on the back end. Because this is what I imagine. I'm not saying this is what these companies are doing, but I could see a way where companies could say like, let's enter this information that's not public, but like I'm gonna post this one bedroom for $1,200. Oh, you're gonna do $1,200? Me too.
Yeah.
And now you're price fixing.
Yeah.
Like if we're all using via software, we're all using it to choose prices. I could see how that would be that would be price fixing.
Oh, absolutely.
Which I think for people like us that own like, single family duplex rentals and manage that type of property, if anything, them doing that is helping us out.
Yeah.
Because they're separating themselves. Like if apartment complexes are all sort of overpriced in that way, it creates more opportunity for, private landlords to sort of undercut that market.
Yeah. Oh, and fundamentally, the other side of this is like, I own a variety of rentals. Like if I have a vacancy and you have a vacancy nearby, like you and I are going to be competing with one another for the same, optimal tenant. And so we're probably going to make some offers that are, hey, I'm going to be a little bit less expensive, or first month's free, or, there's going to be a variety of different, like, hey, I'll put in a washer dryer for you. Whatever those things are to compete for a tenant. And if what this is alleging is that they were reducing competition by not having these compete against each other on a day-to-day basis, then yeah, you're absolutely right. It creates a price fixing situation, and is, us small landlords, our opportunity to go and ideally win the optimal tenants, let them go get the ones who that can't afford our places or can't qualify for our places.
Well, I almost think that's the thing that's hard to understand about this situation is like why. And this is what I struggle to understand in any sort of price fixing scenario, where it's like, why doesn't one of them just fall out of ranks?
Yeah.
Like if I own an apartment complex, like, cause we could take that scenario you said, and now we just both own apartment complexes.
Yeah.
Right. Lord willing. Like if I own an apartment complex and you own one down the road and we both have the same amount of vacancy, why do I want to fix my price to yours? Like if we're both trying to reduce vacancy and increase occupancy, why would I not just try to follow the market?
Yeah, I'm sure people are in there that really crunch numbers and understand something we don't understand, because there's something's going on here. Something's funky.
It is interesting because I don't know how that 141 million, if that represents company 10%, it actually doesn't seem like that big of a number.
It's not a very big number in the grand scheme of things, because you assume 300 million people here in the United States. Could be higher, could be lower, depending on which party you're believing here at the moment. But in that general ballpark, you assume average home size is 2 people on average. So 150 homes here in the United States. What, 50% of them are rentals, give or take. So 75 million rentals here. So what is that? $2 per rental?
Yeah.
Or 10%. You're talking about like $20 per one of these affected rentals. Like that's not anything to write home about, I would say.
Yeah, it's not huge. It does seem like maybe that was just a go away kind of number.
100%. Yeah. And by the way, I apologize if I did public math there. If I screwed that one up, but please make fun of me in the comments or something.
Well, I heard you say 150 homes, and I'm like 150 million.
Yeah.
But you were doing the quick math, or the
back of the envelope math.
Back of the envelope math. I like it.
Well, to stand out, maybe Ryan, we should invest in one of those giant free rent signs for the front of some of our vacancies. That'll definitely set us apart from the big dogs who are potentially price fixing.
Yeah, that's a great strategy.
Yeah,
I see maybe free market rent.
Yeah,
free market economics rent.
Yeah,
with sources on the sign.
Oh.
Click these links. Read these articles.
I love that idea. Actually, it's great. Well, man, we've gotten into so many great topics, and I feel like I could talk. We could just keep talking for hours and hours.
I mean, we've had these conversations. They just haven't been with mics in front of our mouths. So
exactly.
That's actually the whole premise of the podcast. Is Ryan and I have had weekly meetings now for almost a year, and at some point, like in the last month or two, Ryan was like, "We should start recording these."
Yeah.
And then here we are today. Not exactly what we had in mind, but it's actually even better.
Yeah.
I'm impressed.
Thank you. Well, this has been a long work in progress, and we're thankful to finally be here. So I know we've talked a lot about rental property investing and running businesses and kind of the whole 9 yards. So I'm I think to stay on theme for the episode, I'm gonna ask you this question. And this goes back to, I want you to think back to your maybe your 2017 self, maybe your 2013 self,
Oh boy.
and say, if someone has never invested in real estate and they had 40K to get started, what would you recommend they do?
Where are they located? I think that's an important question. Are they here locally, or are they an out-of-state investor? What are you thinking?
They're not here. They're, let's say they're Southern California.
Oh, okay. Yeah, you can't trust these long-distance investors. These guys from California. All right. So fundamentally, I think you need to learn a little bit. And I think anybody who comes in here and their first project is going to be one of these, big renovations or something like that. I think that's foolish. I think that is, I think you can be an investor that does value add from a distance, but it is so incredibly hard to get started here in real estate investing. I made every mistake in the book, and I hope you'll give me a couple minutes to talk a little bit about it.
Yeah,
I came in here into the Indianapolis market, and I started with a turnkey, and that was totally the right approach. I bought a $74,000 rental, something like that. It was 1505 South Leland. You guys can look it up. I don't own it anymore, so I don't need to hide the address. And you can go back. It was back in 2017 I purchased that one, and I didn't know what I didn't know when I went through that process. I didn't know what the buying a house looked like. I didn't know how to do an inspection, how to negotiate during the inspection window. I didn't know how to hire an effective property manager at the time. Obviously, now everybody can just call Intrigue and you're good to go. But
thanks.
Yeah. But I didn't know anything when I got started here. And if I would have taken on a major renovation at that point in time, these are the hands of somebody who types for a living. These aren't the hands of somebody who knows anything about construction in the grand scheme of things. And I would have lost my shirt because I wouldn't have known what questions to ask. So fundamentally, that you're talking a little bit about what somebody should do. I think somebody should probably buy a turnkey and then continue saving their money until they are ready for number two to do whatever that next step is. I know you guys have done quite a bit of construction in your time. It's hard. Contractors suck to deal with. That's the reason off-leash construction exists, is because I got robbed by so many contractors that I said, screw it. I found one good one. I'm like, you're going to just come work for me. And then everybody started asking if they could use them too. And that's how we got here. So fundamentally, buy a turnkey, learn that in that first transaction, and then on transaction number 2, go do the value add type thing if that's what you're interested in, or just continue to go down the more turnkey route and find an incredible property manager to manage it. Don't be foolish, in my opinion. Hire a property manager. You're not that good at managing from a distance. I promise you, whether it's short term or long term, what you'll pay a property manager is way less than the headaches that you will have, and probably the financial impact you will have from not having a competent local property manager. So many people are penny wise and pound foolish, and try and save that 10, 12%, whatever it is, and do it themselves. And yeah, I think that would be the approach that I would recommend. I've made every mistake in the book. I learned something on every single transaction, literally every single transaction. I've done over 200 now. I still learn on every single one. So assuming that you've got the entire picture because you've listened to a couple podcasts and read Bigger Pockets, I promise you don't. I promise. And so learn, use that $40,000 as the cheapest education that you are investing in yourself and investing in your future. And it's not like it's gone once you spent it. It's there in equity in that home that then you get to carry forward and grow.
Yeah. Man, I think that's great advice. I just need to, when I have new client consultations, I just need you to just come in briefly just to say that.
Well, I'm talking against my own book here. As the contractor here, I'm talking against my own book, but fundamentally, everybody and their mom has read about the Burr process. I'm sure everybody and their mom has watched Tariq El-Moussa kick down a wall in Flipper Flop with Christina. And so everybody wants to, everybody wants to do that. And I get it. Unfortunately, that is such a difficult game. And there are so many people who are willing to pay more than you should because they've all watched those same YouTube videos, those same videos themselves.
Everybody's just hyped up on that sort of romanticized real estate renovation experience.
Yeah.
And Man, yeah, I'm already thinking about like I just want to clip this segment and I'm gonna like have like an email that goes out when somebody says I want to do the Burr method.
Yeah.
I'm gonna because I talk to I mean it's weekly. I talk to so many people that are like, I have 25 grand and I specifically want to do the Burr method. I want to add as much value as possible, and I want to start with a property that costs $50,000 and work with a hard money lender. And it's like I'm just like, you're either not going to buy a property or you're really going to regret whatever you buy.
Yeah, it's going to be so bad. All right. Well, for anybody who Ryan isn't able to talk out of the Burr method, I think there are a couple of things that you can do to really be effective if you're going to be effective. Again, I think that you should do a turnkey to start. You're going to learn a ton about the actual transaction process. But if you're like set, this is what you're going to do. ARV or your after repair value needs to be above $250,000. You don't have enough fat on any deal under that amount to actually be effective, because something is going to go wrong during that process. I generally advise north of 300. But like 250 is like the absolute minimum, in my opinion, that you can be effective. Go for it.
Sorry, I want to interject there. So that's the third. Have you seen people do Burr deals where their ARV is above 250 or 300 and they're able to be positive cash flow when they get to the rent step?
Not on long-term rentals.
Yeah, because that's where I think, because the counter advice I've seen is like your ARV almost has to be low for Burr method if you really want to hold it as a rental that is positive cash flow. Because so many people I talk to, and you could argue that, hey, maybe you just want too much.
Yeah.
Like
you don't get to have everything.
Yeah.
You don't get to get a free house through the Burr method and get cash flow, and not have a business that you get to run, in my opinion. Like,
yeah. But it's crazy. So many people want all those things. And I say, like, the only way that's maybe possible is you got to find a cheap little house that is like, you buy it for $50K and it'll put 50, and then you can somehow rent it for $1,200 a month. But see, like, where are those deals?
Yeah, they don't exist. And let's be honest about it. Do you really want those tenants long term? I don't want those tenants long term, and that's why I'm making.
Did 2017 Nick want those tenants?
Oh, heck yeah. Well, you know what? I didn't know who those tenants were. Again, this gets back to the point that I didn't know what I didn't know. Yeah. I didn't understand that if you've got an under $1,000 rental, like, your vacancy rate's going to be absolutely stupid. Like, yeah, you put 5% on there, baloney. You're going to be at 12 to 20% actual vacancy rate when you take into account the fact that you're going to have turnover time, you're going to have non-paying months. Like, again, these are all the things you don't know at that point in time. Getting back to my couple of quick rules, like, 250 plus, you're probably going to have to short-term rent it. Like, that's going to be the only way you can potentially cash flow, or you have a chance of being cash flow neutral, of being cash flow like even when you take into account like a long-term rental, which is a win in the grand scheme of things. The other thing I'll say is, like, find the ugliest houses you can. Like, if it's just, I just need to do the kitchen and the bathroom and paint, and you think that you're gonna get anywhere near like all your money back out, you're wrong. I just, there's something you don't see. There's information that you don't have. My personal advice is I like to find the ugliest houses. I want knob and tube wiring. Everyone freaks out when they hear knob and tube wiring. I love knob and tube wiring. I'm like, that's my money right there.
Know what you should hear when you hear knob and tube wiring? You should, that. But you should hear, oh, I get all new wiring.
Yes, all new wiring in this sucker. I like collapsed sewer lines. Those are fantastic because
then you get a new sewer line.
Foundation issues. That one's a little tougher. Foundation issues, like light foundation issues that you can address, great. Major foundation, that might be more headache than it's worth, and you're not going to see your money come out the other end. But fundamentally, like, you want to find the infrastructure problems with houses. If it's just lipstick on a pig and you think you're getting all your money back out, I promise you, you're wrong. Yeah, there's not that much of an inefficiency. The market's more efficient than that, I should say.
Yeah, that is great insight. Again, I need you to just say this to every person I talk to, because so many people, they want to do that 70% and they want to have like that, they want to force that 30% in equity, and it's like,
don't we all?
Yeah, but it's like, that's just not given away.
No,
like, you have to buy the thing that, and take on the challenge that other people weren't willing to do.
And here's what I'll say: I do the Burr method. I do flips. I can hit 100% BRRRR running a construction company. So my cost of construction is better than just about anybody in Indianapolis at this point. And I can hit it about 1 out of every 2 times. And I'm pretty good. Like I've got better connections with agents than almost anybody in Indianapolis and wholesalers. Like I can hit it about 1 out of every 2 times. If you think you can hit a better rate than that, again, good luck. I think that you can be effective. It's going to take analyzing 100 deals, making 100 offers, getting 2 under contract, closing on 1.
Yeah.
Like that's fundamentally what it's going to come down to.
I think that is good advice for somebody who's going, like, just to bring it back to that original question, is like somebody who's trying to get their first investment. They don't have a ton of money, but it is enough money for a down payment on a turnkey property. The end game is buy that turnkey property that has good cash flow numbers, so that you could get those reps in, because there's a lot of value outside of the cash flow in just you're building relationships. Yeah. You are owning a property. You are going to have to replace some mechanicals and stuff along the years to come with that property. But it's just, you are also just getting the experience of purchasing that property. And I think that is like the analyzing deals. That's what I wanted to point. Yeah. Analyze, if you're going to buy 1, analyze 100. Just analyze as many as you can, because that's how you can have confidence in the market.
Yeah.
Because I talked to so many people that have never bought a property, and then they're afraid to buy anything because they don't know what a good deal looks like. Well, if you analyze a bunch, you're going to know when one is like, well, this looks marginally better than everything else I've looked at. Nick, thank you for being on the show today. I really appreciate you coming in. It's been such a great conversation. I feel like we have covered so many great topics. If you guys want to give Nick a follow on Instagram, you can follow his team at Off Leash Construction. That's on Instagram, OFF Off Leash Construction.
Yeah. We're on Instagram. We're on Facebook. And the other thing I'll say, for anybody who's interested in, we got the real estate side, but anybody who just wants to see some really cool wedding stuff, the Wilds venue is another place, at the Wilds venue. Yeah. And at Laurel Mill are 2 awesome follows as well. We've upped our social game. Let's put it that way.
Yeah. Thank you for tuning in. If you made it to this point of the episode, we appreciate you. And take care, guys.
Yeah. Thanks, Nick, for being here. Looking forward to the next one.
Thanks for having me, guys. Really excited.
And see you guys next week.
If you enjoyed the episode, please leave us a 5-star review on Spotify and like the episode and subscribe to our channel on YouTube. That really helps us out.
If you think someone that you know could benefit from hearing the things that we talked about on today's episode, please share it with them.
You can check out our full library of episodes wherever you get your podcasts. And if you have any suggestions for the show, like who we should interview or a topic we should discuss, please email us at circleinvestorpod@gmail.com.
That's it for today, but join us right back here next week for another episode of the Circle Investor Podcast.